Good evening. Welcome to Bizworld. Foreign investors began the first week of 2023 on a positive note by net buying 72.3 million ringgit of Malaysian equities. According to MIDF research, the attraction of foreign inflows into Malaysia may be due to positive sentiments of a boost from China's reopening. Prime Minister Datuk Seri Anwar Ibrahim also laid his foot down that decisions on interest rates was the sole prerogative of Bank Negara, in which the government would not intervene, a move that lifted the confidence of investors. The top three sectors which saw net inflows by foreign investors were financial services, construction and energy. Meanwhile, the bottom three sectors with net outflows were plantation, telecommunications and media and utilities. Local retailers remained the most optimistic, net buying every day, amounting to 52 million ringgit for the week. AmInvestment Bank is optimistic that 2023 will be a better year for the Malaysian equity market. Its CEO, Tracy Chen Wee Kang, said although there is an expected interest rate hike by Bank Negara this month, there's also a high chance for it to be tapered off in the second half.
I think if you look at most analysts, they have actually looked at that. I think there will be a turn, hopefully in the second half. And with that, with China reopening, there's a lot of rebound, right, on the tourism-related sectors, on services, and like even for both market, Bursa and Singapore stock market, we are optimistic.
She was speaking after launching a partnership with Equities Tracker International on the Singapore stock market educational campaign. The investment bank also aims to reach at least 15% growth in trade value for the foreign investing services in the next 3 financial years. The country's aviation sector is set for profitability this year as passenger traffic continues to recover, with jet fuel prices easing and airfares remaining high. However, Maybank Investment has revised downward its projection on passenger traffic this year to an average of 78% of the pre-COVID level due to the slower than expected return to service of AirAsia's aircraft. In the long term, the firm expects passenger traffic to continue to be driven not just by the return to service of AirAsia Malaysia's aircraft, but also by the expansion of My Airline and the return of foreign airlines to Malaysia. It also expects Capital A's number of passengers to recover, driven by the return to service of its entire fleet of 200 aircraft by the end of this year. Another catalyst for the country's aviation sector is the reopening of China's borders, which could add fuel to the recovery momentum. Prasarana will spend a total of 2.8 billion ringgit to improve train and bus services, which involves replacing train equipment and increasing the number of trains and buses. Its Group CEO Muhammad Azharuddin Matshah said the provision given by the Finance Ministry and Transport Ministry involves the entire public transport service under the management of Prasarana. He added that the replacement equipment needed for trains on the Kelana Jaya route, as it is often having service disruptions. The train should have been fully maintained in the last 3 or 4 years, but it could not due to supply chain issues. With improvements that are currently underway, Prasarana expects to be able to increase the number of passengers such as before the pandemic. Last year, the daily average number was 720,000 passengers, where 520,000 were rail service passengers and nearly 200,000 were bus passengers. And that's a wrap for Bizworld. Thank you for joining us. I'm Raymond. Make sure you stay tuned to TV3.